Hello, everybody. This recording is to go over bank reconciliation. We're going to use the example of a company, Ramakan Industries, and we're going to do a December 31st bank reconciliation for them. So the question says it is the end of the fiscal year and Ramakan Industries needs to reconcile its company books. Use the following events to complete the worksheet below. So the first thing it states is that the closing balance for the bank statement is $483,294. So that needs to go on the bank side of the bank reconciliation. The left side of the bank reconciliation is the bank. The right side is the book. So as I stated, that needs to go on the bank side. So we're going $438,294 on the bank side of reconciliation. Now, on the other side, it says the closing balance of the book is $482,145. So we're going to put that on the book side of this reconciliation. Now, the next event says that check number 682 for $425 and check number 683 for $681 was outstanding in October. Now that's October, folks. We're dealing with December reconciliation. So let's hold off on that one and let's look at the next event. So it says check number 683 for $681 and check number 7112 for $1,358 and check number 720 for $528 was outstanding in November. That's the prior period. That's not the current period. So let's see what checks are outstanding for the current period. So it says for the current period, check number 733 for $821 and check number 772 for $918 was not remitted in December, along with all previously outstanding checks. When it says previously outstanding checks, it's talking about the prior period's outstanding checks. And the prior period is November. So we want to calculate all of November's outstanding checks along with December's outstanding checks. So November had check number 683 for $681 outstanding. They also had check number 712 for $1,358 outstanding. Of $482,145. That amount also takes into account this canceled check. So therefore, there's no transaction for a canceled check. Next, we have check number 734 was incorrectly written for $1,865 when the bill was actually $1,685. The vendor only took the correct amount up for the bill. Now, that means that the bank has the correct amount, $1,685. However, the books need to be corrected for the error. So if we go down to the book subtractions, we're going to put error and $180. Next, the financial institution collected $7,832 of company outstanding debts for Ramakan Industries. It charged the company $783 for the services. That equates to 10%. This transaction was not recorded. So this transaction will show up in the bank statement, but it's not on the books, so we need to add it. So there's different ways you could do this. I tend to like to do this in two separate transactions. So the first, we're going to attribute to the collection, all right, of the $7,832. And then second, we're going to put on there bank service fee of $783. Now, next, the bank charged bank services of 1% of the closing bank balance. The closing bank balance was $438,294. So therefore, that bank service fee will be $4,382 or $83. That is a deposit in transit. So we're going to put deposit in transit, and that is going to be $25,463. Now that we have all of our transactions in the reconciliation, if you were to add the transactions, if you were to take the 438 and take all the additions, take out all the subtractions for both sides, with that in mind, we need to take $1,865, subtract it from the $1,685 to get the difference. And the difference is $180. Now that difference is an error on the books. And so we need to subtract it from the book. November also has check number 720 for $528 outstanding. So that's November. December, they are showing check number 733 for $821 outstanding, and check number 772 for $918 outstanding. So those are your 5 outstanding checks. October's outstanding checks do not count. If you actually look, October had an outstanding check 682, but however in November it does not show up on the outstanding check register, meaning it was probably cashed in November. So going forward, the next advantage is check number 758 for $823 was canceled. Now, that means that check number 758 did not go on the bank balance because it never cleared. However, on the books, because we entered it as an expense, but then we're going to take it off or write it off the expenses, that means that our beginning check balance on the books, and that amount needs to go here for bank fees. $4,380. Let's just say 382. And let's not round. All right, so next, check number 492 received from bankrupt bank had insufficient funds, so it was NSF. The check was for $25,000 to Ramakan, and the bank also charged an NSF fee of $35. So we're going to say there was an NSF of $25,000 and there was an NSF fee of $35 for that transaction. The last event, the accountants deposited $25,463 receipt in the bank after the bank's cutoff time for daily deposits. The deposit was made December 31st, 2016. So with that, we need to add that deposit because that is you should come up with a total for the bank of $459,597. And then you should come up with the total or the book of $459,597, showing that both sections are equal and we have a reconciled book. Hooray.